Hello traders, Gary Wagner here. Approximately 9:30 in Honolulu, making it 3:30 in New York. It is Friday, finally, 7th day of August, 2012, and this is the daily report for gold and silver, our weekend review. And once again, traders and investors, what a week we have seen in the market. Incredibly strong finish. You can see 1737.80. That is off of the COMEX close today. We're trading roughly at 1735 as we finish up in the Forex or aftermarket continuous contract. Let's go ahead and pull that up. And as you can see, 1735.50. Not to be outshined by gold. Silver, incredible showing in the marketplace today, up almost 3% on the day. As you can see, well over $33 an ounce, currently trading, roughly printing at 33.60. It's had a low of 31.94 and a high of 33.85. We are right near the highs, as you can see on silver. What a week we have seen in the precious metals markets. Incredible surge to the upside, incredible breakout. But you know, we've been looking for that. Today, we had a weaker than expected U.S. jobs report. Number came in at about 96,000 new jobs added when the expectation was around 120,000 on a conservative side. Some might ask, well, why would 96,000 be such a bad number? Realize that we always have people leaving the workforce, and it is estimated that it takes approximately 150,000 new jobs just to have a wash, just to break even. So when you come and see something like 96,000, that means that we are really contracting. The economy itself is not moving along and really picking up momentum as we had hoped to. As you can see, 1736.40, looking at a daily chart, obvious and clear that we've had this breakout and this hard breakout to the upside. Let me go ahead and kind of move this up and we'll take a look at it from a more detailed perspective. Again, daily chart, we had two key days. You can see here and here where the market, meaning Friday, and then the beginning of the week where we had these tremendous surges. If you recall from last week, what we were looking at was the fact that although we had broken out above our compression triangle, it tried on 3 occasions to go in and test that area. It was able to hold it. You can see the lows go a little bit into the area, but not much. Sizable move up. After that sizable move, of course, we had our period of rest. And of course, that rest period, consolidation period, was simply followed by this sharp upside move. I want to take a look back in a longer term perspective. What we've done is we're taking a look at our weekly chart. And on this weekly chart, of course, we have our MACD on the bottom. We also have our Elliott wave count, straight candlestick. The first thing that you'll notice when we look at this chart is as follows. When we look at the activity over the last 3 weeks, and each candle, of course, represents a week, you can see that we have had fairly sizable upside moves, and without a doubt, we have clearly broken above this compression triangle. Well, what does that mean? If, in fact, the techniques hold true, it's really signaling an end to this major fourth wave. And that's exciting news, because when we consider the type of activity that we have been looking at and these swings that we've seen in the market, this being our intermediate count here, that takes us up to a major 3. And then, of course, this major 3 concludes with the major 4. It is my belief at this point that we have a high likelihood that we've actually entered our impulse wave, major 5th wave. And that's exciting. Why? We've talked about it all week. It takes us to new highs, simply put. Traders, I want to go from the very broad strokes to take a micro look rather than a macro look at this market. To do that, we've got a 60-minute chart. It is in straight Henkin format. We'll go ahead and expand it in a second. My daily subscribers know that yesterday I sent out a recommendation that we move our stops up. Just wanted to be careful, of course. Let's take a look at this entire position and how it's been unfolding. It's really turning out to be one of our better trades Our January 2nd trade, we took $130 out of the market. Right now, we're up over 100 on this trade, and we're still going strong. But here's what we noticed all week, and we've been talking about it. When the market moves up, it tends to do it kind of in a stair-step manner. And the stair-step manner, like anything else, is where you have periods of great rises in the market, and then that's followed by a period of consolidation. Then again, you get another spurt up, and then consolidation. The interesting thing, though, is when we take a look at this market right in here, and let me go ahead and blow that up, what you'll notice is that this move today was a lot more powerful than many of these upside moves we've seen recently. Take a look at it this way. When we witness this market move, from example, this is the area of about 1650, 1660. You can see that we get it moving strongly higher, and this takes us up to about, this is 1690, and then of course our 1700 mark is right here. So what we saw was, as the market traded sideways, this is really where the market is kind of, I call it a rest stop, but it's where you see some consolidation. It attempts to move back above 1700. You can see that right here. And what happened was, it wasn't really able to hold it. It comes back down, but at the same time, we found very, very good support in this area right here, which is 1690. But look at the power, and these are straight candlesticks, not Henkins, but look at the power, the sheer power that we saw as this market accelerated and started to trade to new highs. Now, traders, you should now be sitting with your stops just below 1680. I believe we've got more room on the upside, and considering the fact that we actually put this trade on at, what, 1636, that's this area here, and we've gained this much in terms of the position itself from where we bought it to where we can sell it, we've got a real nice position on. Short term, you can see that the MACD is certainly not overbought yet, but it's starting to go into that territory. Traders, I am really, really pleased with the performance of this last trade and what it's doing for the profits of my subscriber base. Now, as you can see, all I've really done here is converted our candlestick chart into a straight Henkin chart. Again, still very, very short term. We're looking at 60 minutes. But as you can see, I really want to point out the dynamic power, the really utter strength of this upside trend as we witness this market breakout. Look at the candle size on that. It's quite impressive indeed. And the last chart that I want to look at today for gold, and then we'll move into silver. It is a daily chart, 1440 in terms of minutes. Henkin Ashi format gives us a really broad scope of the market. You know, there can be no doubt when we take a look at how this market was trading, and this, of course, was back when we were still trending to the upside before we hit our massive consolidation and massive correction. You could see that it was channeling up quite nicely. We had the strong breakout to the upside. We had our record top. This, of course, is 1920. We know what's happened here as the market compressed. But what you can genuinely see is this. We are back to, in terms of taking a look at trend itself, and the way I like to do that is with the Henkin charts, of course. You notice that on our daily chart, we're back to pretty much solid green. We had one little period as it hit that only resistance area that I could see, which was about 1705. It was based on a Fibonacci number, but you can see that after that, it pretty much went straight up, and it was a strong, strong market. When you compare that to the activity we have had to endure over the last couple of months, this sideways trading activity where it had a narrow range, very difficult to trade, and luckily we were able to pull good profits when we pulled profits, take very, very small losses. We've got about seven trades on the year so far, and we are excelling. We're doing very well. In fact, I received an email from one of our subscribers yesterday, and basically what he said is that he loved the way when I analyzed it, I also try to teach, but what he was more pleased with was the additional $100,000 in his trading account. Traders, I love to hear stories like that. If you've experienced some good fortune, please let me know. It makes my day. It makes what I do for a living very, very worthwhile, and that's what I do this for in the first place. Let's take a look at silver. Silver has just been dynamic. Incredible move in the market. Let me scale that a little bit. You know, we talked about the fact that we really saw really strong support when we saw this market under pressure. You can see that right in this area. This is where the market actually forms a base before, again, breaking out utterly to the upside. This support level absolutely held. That was roughly 31.90, call it 32. We're well above 33. So at this point, when we're looking at different target areas, we need to actually add to our Fibonacci retracement. And traders, I've just done exactly that. We had, of course, our 38 and 50%. This is what we were looking at before. The next level after that is, of course, going to be 61 and then a 76%. That's a retracement from this last rally that we had, moving up to our top just below 38, then trading lower, much lower, to about $26. And as you can see, we have eloquently made it past this 61% level. What is our current target? Well, first of all, we got in at 29, so we're positioned beautifully. For those of you who took my advice midweek, this week and last week, you've added to those positions. So you've got larger positions, but your average price is a little bit higher, but your profit's a little bit greater. My real target right now is $34.94, roughly $35 an ounce. I think that that's where we're headed in silver. It's going to go straight up. Well, it usually doesn't, but this is my target right now, roughly in the area of $34.92. In terms of my target in gold, we're really approaching $17.50. That's going to be the first area there. And then that 1802 or 1803, that was the top that we, the secondary top that we got to after falling from 1920. Exceptional week in the marketplace. This has been Gary Wagner wishing you, as always, good trading. And once again this week, our wishes have come true. We'll talk to you on Monday for another daily update and review. Bye-bye.